Welcome to Java. Thank you kindly for joining me. It's October 24th, 2024, and it's Thursday. First off, I would like to thank everybody that was in the Discord session last night. I think it was an incredible session that we had. We have the opportunity to discuss in depth everything from the bond yields rising sharply yesterday, which I'll cover in a little bit, to health concerns and multiple subjects basically that we cannot cover on this platform due to either time constraints or also censorship, because it is still unfortunately something that is going on. So if you haven't had the opportunity to go over there, even if it's just in the main chat, you can also join us on the Wednesday evenings. But if you just want to catch up, feel free to join us there. We'd love to see you there. So, with that, let's go into what's going on in markets this morning. Now, we've got, as we always start with our favorite risk indicator, the MMRI, pulling back a bit, as well as the fear greed meter. Now, we're still solidly in greed territory, but we're watching a bit of a pullback. The MMRI is also dropping slightly with the pullback of the 10-year yield and the relative strength of the dollar. Now, what happened yesterday? We watched markets sell off. It wasn't surprising because we were showing basically between the two, the 10-year yield and the relative strength of the dollar were set to rise. And the rise they did. Now, the 10-year yield started going very rapidly. When that happened, I believe it triggered the plunge protection team first off, because we watched quite a bit of a V shape in it yesterday, which is not really natural purchasing. Now, the 10-year yield is basically, as it goes up, it shows that there is a sell off in the bond market. That's why we watch it. So, dumping of the treasuries, which is what could cause this crisis in the markets. Now we've got Macro Elf. If you don't follow him on Twitter, I think you should. He's European, but I think he's got a very solid view on what's going on with this bond market. Now, what he's bringing forward is that both candidates in this election coming forward see persistent fiscal deficits, and Trump policies are seen as more stimulative for growth and inflation. Now, both very definitely will bring inflation because we're very deep down that hole and it's not going to stop. The debt will not be paid off. It's not meant to be paid off. And we're going to continue with this currency devaluation spiral that we are in. So, with this, today, I think we'll see a bit of recovery in the stock market, is what it looks like right now. Yesterday, plunge protection team, in effect, they did step in and start buying that debt. We've got gold, silver, cryptocurrency up on this. It's partially an inflation trade, also partially offsetting that bond issue that we're having. Now, these bond yields, people are beginning to speak about bond vigilantes. That's not what this is. This was a step in to purchase the debt. The larger money, if you will, are not purchasing that at these times. Basically, we've already got the banks have purchased what they were required to for their holdings. And what's going on there is a different nature. Now, we've got from yesterday, they were all basically taking a beating. I'm doing this early because I've got a couple of other things I've got to get going today. But showing the weakness from yesterday, from that sell-off, they did recover a bit with technology getting hit the worst. Now, gold and oil up. There's issues in the Middle East going on again. That's pumping oil a bit. And we've got gold and silver again on that counter trade to basically not just inflation, but also in counter to the bond market and debt. So we've got Japan's finance chief giving a warning over the yen's rapid slide. This is basically in context of the currency wars going on. They hold a large amount of US Treasury debt. If they have to sell theirs off, which is also a part of what was going on, to spike that yield to basically protect their own currency, their economy, they've got to balance those out. Now we've got this coming from the Committee for Responsible Federal Budget. saying that a US fiscal crisis would happen incredibly quickly and there's no way to predict when. Now, this is speaking about what we've been talking about here, as well as Greg Manorino has also been bringing up, and a couple of others, but not very many, talking about the credit lockup that is coming. When this comes, will happen almost immediately. There will not be time to move on it. So basically, position yourself and be ready for this now. Physical currency, if you have money in banks, in institutions, get it out now because that could happen faster than you could get to the bank to ask for it. So I want to bring up today, we've got, this is basically the earnings, not just today, but prior to market open tomorrow if you are trading these. And I'd like to move to a different area, basically artificial intelligence. Now we've got analysts versus the banks. What they're saying here, analysts questioning banks spending $650 billion on tech. This is basically in artificial intelligence. Now, they're saying this amount will eclipse the gross domestic product of Sweden, and they cannot justify the spending because they don't see how it's coming back. Now, on the counter side of this, we've got JP Morgan Chase, not just the largest bank, but the first to step up and take this into implementation. And why are they doing this is the background question. It's because they see what's coming in the horizon. And this is tokenization of all assets, not just what is on the market being currently traded to tokenize those bonds, debt, currencies, stock market, stocks. Stock market could freeze as well, but things such as food supply, cattle's with EID tags that's already being pushed into this sector. We're going to have water, resources all coming in here. So because they are able to see forward, they're pouring billions, literally, of dollars into this sector. So anyway, moving on, I'll speak a little bit more about how this will affect us as well. Now, yesterday, following on with what's going on with the companies, basically, we've still got the retail apocalypse going on, is what they're calling this. Now, we've got grocery store chains that are closing down. They're shuttering several in one area. We've got the Boeing strike still continuing. The union members rejected the deal. I know you're going to hear about this, but I'd like to speak about that. Is actually not as bad as they're making it seem. Now, there are only two companies that make full-size jets, Boeing being one of them, Airbus, European company, being the other. Now, both of them have massive backlogs in their orders. Any airline that cancels their Boeing orders and attempts to shift to Airbus will need to wait at least 4 or 5 years before they receive any aircraft as it is. So, with this, they would prefer to basically wait out Boeing negotiating with these machinists so they don't have to pay massive amounts higher down the road because they understand what this means. So they're kind of sitting tight, waiting this out. If this loses with the people, this basically is leading to higher unemployment. Boeing has already said they're trimming over 17,000 jobs and could be more. So they're talking about a fundamental shift for the company that could include opening other factories in different areas. So we'll see how that works out. With this, there is this general consensus that we have a wonderful economy, which is not true, and not just for the United States, but also Western tied in the Eurozone. Activity and manufacturing contracting again in October. That's basically what their reports are saying. They've got a multi-billion-dollar stimulus plan that they're looking forward proposing for Germany. And the reason for this is because Germany is the manufacturing powerhouse for Europe, in case you're not aware of this. So all of the manufacturing down, Germany is getting a major hit. They see this going forward with this basically stimulus plan, also massively inflationary. So with this, like to cut to a slightly different sector, basically insurance. The banking, the insurance industry, insurance is about to rise. So this is going to cut out a lot of people, higher costs, again, inflationary, because of the losses that they've been having lately. And this does include home insurance, will not cover basically what just happened with the hurricane. So expect those to rise as well. Now, a couple of other things prior to letting you go for the market open, and I've got to go. Basically, Iran warning BRICS of a big threat from Western payment systems. Now, they've already been working on replacing the payment systems and the SWIFT process. Russia is pushing for a new precious metals platform, basically to back a lot of the BRICS trade, shifting over. The largest currency after the US dollar is the yuan. So the yuan could look to take a large part of this, as well as grain. So foods, um, commodities basically backing all of these. So we'll watch these coming out. Now, again, with the election, we've got QCP Capital analysts highlighting the impact of the United States elections on crypto markets, basically depending on whoever is selected. Going forward, there's still going to be a trend forward and higher. It just will be impacted by the temporary choice here. So with this, we did have American officials confirming 3,000 North Korean troops training in Russia. Now, there was little contention about this, but as I said yesterday, the intelligence came forward that they were indeed over there. But the frightening part about this is that American officials are saying that they don't yet know why the soldiers are there. They actually printed this. So if you're the head of basically all of this going on, the official for all of this contention going on with all of the proxy wars that they're saying, and you don't know why other troops are there when they've been watching the alliances form, I don't buy that first off. But second, if that's true, then you need to step down, sir. So, with all of this, wish you all a wonderful trading day. Just a great day in general if you're not trading. And I would just like to briefly say this message was not brought to you by BlackRock, and also I am not suicidal. Until I see you again, my friends, stay free.